Hi, everyone. It looks like we still have people trickling in, but this is quite the crowd today, which I'm super excited about. Nice to see some of your faces virtually. I'm Jessica Hayes. A lot of you know me, but if not, I am the president-elect for HSMAI Boston chapter, and I'm thrilled to introduce Tim Wiersma today. We had a chance to catch up the other day, and I think everyone's going to really benefit from his breadth of experience and knowledge. As a quick sort of housekeeping, we may be able to answer questions during, but certainly we'll leave some time for the end, so feel free to pop them in chat. I'll go ahead and we're letting people in as we speak, so that's great. Julie's helping out with that as well. And then I'm going to give a quick intro to Tim and let him take over with his presentation. So Tim's a recognized leader in revenue management, specializing in property and portfolio revenue management, sales, marketing, asset turnaround, and he consistently has driven great results for properties around the world. Before revenue generation, he was the vice president for Host Hotels and Resorts. We were just talking about our mutual friends there. And has also held a vice president position with TPG Hospitality, which is a private equity firm. Red Roof Group, where he oversaw revenue strategy for over 650 economy hotels. And he's also held the corporate level positions with Starwood, Canadian Hotel Income Properties, and has been a key advisor for Marriott. Over the course of his career, Tim has worked with major brands, independent properties, top-line business intelligence tools, and has a business configuration to assist hotels in driving optimal results. He holds a BA in Business Administration and Finance and is an active member of HSMAI and is currently serving on the board as chair of the Revenue Optimization Advisory Board. So Tim, thank you, welcome. That's a lot of experience to share, so I'll let you kind of dive right in.
Thank you, Jessica. I tried to make that bio as difficult as possible to read. Thank you. You did a fantastic job, by the way. Thank you for the invite, and thanks to everybody in the audience today. It's great to at least see your names, and I'm excited to see so many people decide to join here today. Just figure out my next. Okay, so you saw the bio already. This is just some of my experience, and one of the little themes that you'll see during the session today is I talk about flying because that's one of my favorite things to do when I'm not working. And that picture there is me with my nephew, Evan, from Richmond. We're just about to take off from their airport there. So you'll see that theme a little bit throughout the session today. Just also want to quickly give a shout out to a few people that I recognize. So Barth Lyons, I saw you online. Nice to see you. Heatherly Klingerman, it's been a long time since we worked together, but nice to see you again. And my mother-in-law, who decided to join as well. She wanted to learn more about the industry. I told her it's not a good time to be thinking about getting into this industry, but she wanted to see what I was up to anyway. So Kat Lineberry, welcome on board as well. And I'm sure when I look through the list later, there'll be other people that I recognize as well. So as I mentioned, I'm an aviation enthusiast, and I could kind of correlate what's happening right now to what pilots call when they're in a condition called IMC, instrument meteorological conditions, which in other words means you really just can't see very much in front of you. You're in the clouds, and you really need to rely on the instruments to get you down safely. And trust me, you really learn to trust the instruments when you're in the middle of a cloud, because you can get yourself in a terrible configuration if you're not really paying close attention to those instruments. So we can all kind of relate to that in today's environment, as there's so much uncertainty in front of us. And so together, we're going to make it through this. And just, you know, right now, it's all about relying on the data, looking at the trends, and coming up with strategies in the short term to make it through. So I thought I'd start out today just by asking a few questions to you. So if you could do me a favor and go to, on your mobile device or on your computer, if you can go to menti.com. And I'm going to pull that screen up here real quick. So if you go to menti.com and you type in the code 5970073, that will get you into this presentation. And I just have a few questions for you. So let's go ahead and get it started. So the first question, once you get in there, is what new hobbies have you started since COVID? Just take a few seconds. Mindfulness, that's a good one. Okay, some great answers in there. A lot of baking, hiking, getting outdoors. I've seen a lot of that in the surveys. Cooking is big there. Netflix, I can't tell you, we are definitely getting our subscription worth with Netflix this year, for sure. Give it a few more seconds. Power napping, hey, I like that one. Painting. Lots of house projects. Okay, great. Next question. See if I can get this thing to move. Okay, has COVID affected you from an employment standpoint? Okay, it looks like you know, a good percentage of you are still employed yet. That's great news. You know, some of you are furloughed or laid off, and certainly hope that that situation turns around for you guys. Oh, is it?
Look at the comments.
Someone just told me my audio is off. Can anybody hear me?
I can hear you, Tim.
Now. Yeah, we can hear you now.
Okay. I hope you guys didn't miss too much there. Okay, so the next question. At this point in the industry economic cycle, rate the importance of revenue management. Okay, so majority of you see the role of revenue management as very important in this point, and I couldn't agree more. It's not a set it and forget it type environment. There's still many opportunities to optimize revenue and profitability at your properties. Okay, at this point in the industry economic cycle, do you feel focus on sales deployment is, and then you can answer the question from there. Okay, so a lot of you feel it's either very crucial or moderately important at this point in the cycle, and I couldn't agree more that it's certainly important to have sales deployment. The deployment may look a little different than what it's been before, but certainly, you know, just being out there, reminding customers and continuing that relationship with customers is so important. Need to be top of mind. What do you expect to be the #1 source of new reservations over the next 2 to 3 months? Okay, kind of mixed between OTAs and direct, which is very similar to other surveys that I've done. GDS obviously important as well, but outside of that, we're not expecting a lot of business coming from other sources at this point. What level of marketing spend is your company, if this is applicable, planning in the next 90 days? Okay, so you know, with budgets being cut, a lot of you are just not able to spend the same amount of money as you were prior to COVID happening on your marketing spend. Yet, obviously, it's an important part of the recovery process. So hopefully you have money in your budgets for next year as the recovery starts happening. And then what is most important to your market to see in a meaningful recovery? Okay, so vaccine, we want the virus to go away. Consumer confidence is big. So kind of think about those items as we move forward and you're building your strategy. Obviously, you can't, probably not going to invent the vaccine yourself, but you know, focus on the consumer confidence piece and the type of business that still would come even in a recovery stage. And then what news sources of data have you been looking at to analyze trends and forecasts? So a lot of future-looking pace information. TSA passenger data. OTA insights, so what your competitors are offering. Demand 360. Okay, great, thank you. What KPIs and or measures are most important for hotels at this point in the pandemic? A lot of occupancy. Okay, geographic origin data, that's great. GOP. Again, pace, market share. Okay, thank you very much for that. And I believe that is the end of the questions. Go back to my PowerPoint here. Okay, so today I'll present to you some data, national data, primarily from Smith Travel Research. I think I lost my screen here. I apologize. And then we'll get into the local greater Boston area data as well. So as we kind of look ahead to the future and the different phases of recovery, the point that we're in right now is the initial phase. So domestic leisure travel, it's almost 100% of our occupancy right now is really leisure driven. We certainly saw a nice move up in leisure business over the summertime. And then domestic leisure, eventually they'll get more comfortable flying, especially the short haul flights. Phase two, essential meetings. So companies have just really not had meetings for a long while now, and essential meetings will become important moving forward. Small and medium events and then regional international meetings as well will become part of the phase two recovery. And that begins in Q1 of next year. And I emphasize the word begin. It doesn't mean it's all coming back at that point in time. And then later in Q2, we'll start seeing larger events start happening, and hopefully, and again, depending on how the number of cases go in the future, long haul international as well. So that's kind of how we're thinking about the recovery happening. It's not going to happen overnight. The recovery is going to happen over several years. But this is sort of kind of the phases that we're looking at. This slide here is interesting. It shows the number of rooms sold in the US by week since March 7. So you saw it kind of, the low point was in around April 11. Then it kind of steadily started growing throughout the summer. And this data is a little bit stale already, but we're starting to see it decline again as the number of cases start increasing. What's really interesting here is the ratio related to the TSA checkpoint counts. So you can see the significant decline in TSA checkpoint counts and the gradual recovery. So air travel is still very light and not recovering the same as occupancy is recovering. So a lot of people are opting to drive to their location versus flying. And so, you know, a ratio before the pandemic started was around 61% TSA check-ins to occupied rooms. Now it's sitting at about 27%. So a lot needs to happen for both the hotels and the airline industry for sure. But this just kind of shows the trend of people are traveling, especially the leisure customer, and they're driving to their destinations. Next slide just kind of correlates the number of new COVID cases related to the percent decline in overall occupancy, or RevPAR, I should say. So we did see, you know, at the end of June, that kind of that spike up again, and but the declines weren't as significant as they were back in April and May. Again, that speaks to the summer leisure component. But now if you were to project that the new cases line out, we're starting to see that number go back up again. It may even go up higher than what we saw this past summer. And that will likely have a more negative impact on RevPAR in the near term. Profitability remains poor. EBITDAs, so transient RevPAR is significantly down. It was down as much as 93% back in April. It's still down almost 75%. Gross operating profit per available room is just non-existent. I mean, 91% decline in overall profitability. EBITDA, earnings before interest, taxes, and depreciation is down, and you know, it's one of those items very closely related to GoPAR, and so bottom line is hotels aren't making any, investors are not making money right now. I thought this slide was interesting as well. So when you start thinking about the recovery and the point that you're in right now, you know, the fact that you know, basically the higher density the market is, and the longer the commute, the more difficult it is to conduct business in markets like this. So Boston, unfortunately, is higher on the list there. Group demand, you saw the significant decline in overall group demand, and it's beginning a very slow recovery. We'll continue to see low numbers probably through Q1 of next year. And then likelihood of taking trips. So the question was asked, based on a scale of 1 to 5, how likely or how do you feel today, and how likely are you to engage in the following activity: domestic leisure travel, domestic business travel, and then international leisure and business. So you can see leisure, domestic leisure is at around 41%. Business is at 25%. And then international, both leisure and business is around 17, 18% right now. So obviously with our borders pretty much shut down, that's not going to happen for the international customer, which unfortunately really affects the greater area of Boston. University of Michigan puts out a consumer sentiment report. This is a long range view of consumer sentiment, or in other words, their confidence in the future and their likelihood to acquire goods and services such as travel. And you can see the back in early 2000, after 9/11, confidence dropped, but then it very quickly recovered. But then the downturn in 2008, you really saw the significant drop in overall confidence and a slow recovery over several years to get back to kind of that pre-downturn high. And then we're starting to see the projection going down again. I expect that consumer sentiment will continue to decline as we move forward into a very uncertain time period, moving forward with the winter coming, elections, and just you know, the economic uncertainty overall. Travel spend by region in the country. Unfortunately, the Northeast has been affected the most by travel spend. A lot of it is related to being a little bit more restrictive with travel by state in there, but it's certainly down significantly. And then this is a survey that was done by Skift Research, and it's a little bit old, and I'm looking forward to seeing their new one. But it basically points to the fact that the number of consumers who believe COVID will be under control at the end of the year really continues to decline. At this point, I don't think a lot of people believe that you know, there's going to be much of a recovery this year. They're looking into next year, and they're looking more towards the second half of next year. And then planned travel after travel restrictions are lifted. Again, that number has gone down in the near term. So the 1 to 3 month, you know, people are becoming less confident that they'll be traveling in the 3-month time period. And they're kind of pushing their plans out to the 4 to 1 year range in terms of travel. The USTA put out some stats recently about visitations to national parks. And national parks were obviously very popular this summer, the ones that were open. And the really interesting stat here is people were willing, 63% of people were willing to travel 200 or more miles to their destination. So when you're thinking about short-term leisure travel, you may think 200 miles seems to be too far of a reach, but certainly people are more willing to travel further in times like these. Looking around the world, and again, these stats are a little bit old, so you can see the US trend there as far as occupancy is concerned. Starting to go down again. Europe, if you were to look at the most current trend, they're starting to trend down as well. China's had a pretty steady recovery. Part of that is due to the amount of domestic travel. I spoke recently to an operator there, and they've got a number of hotels in China upper upscale properties. And they've been running in the 90% occupancy. The amount of domestic travel that's happening in China right now is at an all-time high. And as far as the latest forecast for the US overall, obviously we're not going to be hitting 2019 in the next couple years. You can see 2021 still shows a 34% decline. This year will be over a 53% decline in overall RevPAR. And if you were to look at CBRE, I didn't include it in here, but I believe they have the US recovering in the latter part of 2023. So now drilling into the Boston regional market. Recovery will happen obviously different in the major markets across the country, and some of it has to do with the amount of domestic share, as well as how much of your business is transient business. So you take a market like Vancouver, Canada, they're very dependent on international travel. So their recovery is going to be a longer recovery, and their transient share is less. They're more dependent on group. Boston, it fits into the more resilient quadrant. And so that's a good thing for you guys. Your transient share is fairly high, and domestic share historically has been high as well. So I know my wife and I, we're looking forward to getting back into the Northeast, and we love the Boston market. And when it's safe to do so, we'll definitely be back there again. And I know a lot of other customers will as well. And then this just shows nothing new, probably. This is similar to what we see across the country, the significant decline in overall flights into your market, Boston, Logan. Domestic flights are down almost 60%, international is down 78%, and even general aviation is down 61% overall. As far as forecasts for the greater Boston area, your recovery is slow, as I mentioned before. This year, you're looking at a RevPAR decline of almost 77%. Next year, you kind of double your RevPAR, and then you can kind of see the increases from there. Your recovery really doesn't happen until being fully recovered really doesn't happen until 2024. You can also see, by type of hotel, so upper priced, upper upscale, luxury, it's going to be a little bit longer in the recovery cycle. The lower price, the economy, mid-scale category hotels will see a quicker recovery. They didn't dip down as far, and the recovery will be faster. And speaking of that, from a profitability standpoint, a lot of the luxury and upper upscale hotels across the US, I shouldn't say a lot, but a percentage of them are still closed. They lose less money by not being open right now than actually being open and having a 40% occupancy. Mid-scale, their EBITDA is pretty flat. And the lower price, the economy segment and extended stay segment, they're still seeing success. They're still squeaking out some profitability. So almost 19% EBITDA overall. And I thought this was an interesting stat too for short-term rentals. Supply has decreased a little bit in short-term rentals, but still a very robust market. Occupancy is running at 63% overall occupancy based on available rooms. and the ADR went down in May, but is recovering nicely and currently at 215. So think about that moving forward, and think about the customer and what they're looking for at this point in the cycle. So some of the key takeaways then is, you need to prepare for a long recovery. It's not going to happen overnight. It's likely not going to be a V shape, but more of a drawn out kind of check mark type recovery. Group demand will be slow and less predictable. You really need to focus on the feeder markets where, again, with groups too, a lot of people will be driving in for meetings, and they'll only be attending essential meetings. So think about that from a packaging standpoint and a marketing standpoint, how you're going to recover your group share. KPIs have changed. RevPAR indices have kind of taken a back seat to other measures related around profitability. Occupancy is, still very big, but also making sure that it's profitable business. So acquisition costs are also major considerations there. And customers are more willing to cross over. I've seen studies that suggest that short-term rentals, they're seeing the crossover for the first time. Customers that wouldn't even consider a short-term rental before are now considering it for safety reasons. They don't have to walk through lobbies. They can cook their own meals. They can kind of control their environment that much more if they have their own unit. Some of the other takeaways, consumer sentiment, consumers' uncertainty has increased, obviously, and will continue down that road. So think about that from a messaging standpoint. Customers are really looking for a lot of assurances. Drive stats, so drive traffic is key. Customers willing to drive longer distances today to get away. So really look at your origin reports and figure out where these customers are coming from. Pricing, consumers do look at pricing, but more importantly, they're looking at assurances, safety, and what type of experience they're going to have when they arrive at your hotel. That's going to really factor in big time. They're going to be looking at reviews more so now than ever before to, again, it may say something on the website, but if TripAdvisor says something completely different, they're going to be looking for those inconsistencies in their decision-making process. And if you haven't heard it enough yet, no more silos should exist between sales, marketing, and revenue management. Revenue management really plays a strong role in providing strategic analysis and communicating opportunities to both sales and marketing, and you really need to work together to come up with the right strategy for that. Let data drive your strategy. Data. I cannot emphasize that enough. Focus on your short and mid-term forecasts and ensure that their forecasts are very comprehensive, frequent, and flexible to address several scenarios. Align your strategies around the most up-to-date and relevant data. That's probably where I spend the majority of my time right now, is assisting customers with forecasting. Other recovery strategies, aligning your marketing strategy with revenue management. We talked about that already, implementing a very flexible cancellation policy. Now is not the time to be restrictive at all. Customers are looking for the maximum amount of flexibility. And if you can capture them and you're flexible with them, if they do decide to cancel, there's a higher likelihood that you're going to get their booking down the road again. Going in on the right audience and customer personas, looking at all the sentiment surveys and what customers are really concerned about, what they're looking for in making buying decisions. market to guests and groups that have canceled. Making sure that you're communicating with them even after they cancel is really important. And then focus on the right offers and the right messaging. So having an advanced purchase rate out there that's restrictive right now probably is not the right thing to do, but if you can package offerings, that may be something you should look at now more than ever before. And we talked about data. You can get data from your CVB, the airlines, OTA Insights, Star. There's just a long list of different places that you can receive forward-looking and recent trend data, and that's important as far as really understanding. We talked about feeder markets. Also, just in terms of looking at your competitive set, make sure that you expand your competitive set or you run 2 or 3 different sets, as well as looking at your greater market trends, because the customer you're looking at today, maybe you didn't look at historically before, or you were focused on a different customer. So you really want to focus on those hotel segments that are getting the business right now. And obviously, visibility is key. What are your competitors doing? Are you top of mind with customers out there right now? As far as guest communications are concerned, leveraging your CRM, again, it's all about constant communication with your customers. Pay special attention to the guests on the books, communicate to them frequently, and accommodate any special needs that they have. It's also an opportunity when you have customers inquiring, they'll oftentimes research an OTA site or they'll research your own website, and then they'll call the hotel and have a lot of questions for you. Make sure you have the staff available to answer those questions, and make sure that they're trained to close that business rather than them going back out to the OTA and booking that business. Reach out to customers or groups that have not rebooked yet. Again, they want to have that conversation with you, and they want those assurances, and come up with creative ways to encourage them to rebook. So that's the end of my presentation. Just a reminder, everybody, it won't last forever, and we're all in this together, and we're all figuring this out together. So at this point, I just wanted to open it up to questions that you may have. Jessica, did you?
Yeah, can you hear me okay?
Yeah, I can hear you.
It looks like there's a question from Mike. Any idea as to the balance between economic factors versus travel safety sentiment, i.e. the long recovery timeline? Presumably, once a vaccine's in place and corporate travel liability is lower, we would expect to see a quicker return to normal, unless the assumption is that we will see a sustained economic downturn / deeper recession.
Yeah, that's a loaded question. But yeah, economic factors do play into this significantly as well. We're battling a couple major items right now, the COVID obviously, and then the uncertainty around the economy. And when there's uncertainty around the economy, you saw what happened in 2008 and how many years it took to come back. So there is a correlation to that. Now, there isn't a lot of pundits out there that would suggest that we're going to see a 2008 from an economic standpoint. But again, we just don't know. The coronavirus obviously has a significant impact on the economy as well. And the longer that it goes on, the more impacts it will have. Obviously, the need for government intervention is important at this point in the cycle. And you can just watch the stock market on a daily basis and their confidence level in another recovery package happening. So it's needed, and I think it will come eventually. I'm not sure how soon, but you know, it's going to need a boost, and certainly it'll happen probably in Q1 of next year.
Great. Let me see if there are any other chat questions. I don't see any. Julie, do you? I know the one question was, will this be shared? It will be shared. It'll be sent out tomorrow. So you can take a deeper dive into the slides. I don't see anyone else.
Okay, well, let me just conclude by saying, you know, if you have the right approach, and it's going to take several tries. I can tell you, when you're flying and you break through the clouds and you can see the runway in front of you, it's an amazing feeling. And I know all of you are still very much in the clouds and trying to figure out your way through this storm. But when you find that approach landing and that runway, it's a great feeling, and we're all going to get there. So just want to thank you for your time today, and just if you have any questions at all, please feel free to reach out. My contact information is on the screen here, and I look forward to talking to you further.
Thank you, Tim.